Bitcoin about to see another leg toward the downside? Or are we about to see a Christmas rally and potential macro reversal after what has been 4 weeks of mostly sideways consolidation? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day, whether you're at work still or you're taking some time off around the Christmas holidays. Thank you for tuning into today's video. Nevertheless, we're going to be talking about Bitcoin today, discussing the macro charts, a 4-year cycle, and of course the short-term price action, talking about the potential for a Christmas rally and a potential for a continued leg toward the downside as the economy seems to be worsening. Let's go ahead and jump into today's video. We'll go ahead and start the market data, but before we do that, go ahead and smash the like button, hit that comment button, and subscribe to the channel, as well as joining our Telegram channel. The second link in the pinned comments down below. You get access to all our charts, analysis, updates, videos, information, news events, and a whole lot more, as well as some random polls that we have in here from time to time, analyzing a few altcoins. If you're interested in joining our trading signal channel, which is our VIP channel, we do have a sale starting on the 29th of December. We'll have a pretty large sale then. Get access to our trading channel going forward in 2023. Of course, you can find all the information here and all of our track records for our monthly trades since February 2021. Let's go ahead and get started with our market data, guys. So for the quarter, Bitcoin is looking at around negative 13.42. I feel like this is obvious to say, but it's going to take a god candle, an absolute god candle, to push Bitcoin into the green for this quarter. We do need to push over, I think it's $19,100 to see quarter 4 turn green. Currently down 13%, with only a handful of days left in the month. It is looking pretty grim. And for instance, this will be the first time in history, guys, Bitcoin will have ever closed 4 consecutive red quarters in a row. That is big news. That is not a good thing. We'll talk about why later on. Moving on to the monthly, we're seeing negative 2.1%. Not a lot of price action this month. If you eliminate the news events, which was CPI and FOMC, and you eliminate the volatility that naturally comes with those news events, we wouldn't have seen a lot of price action within this month. We've mainly stuck to a pretty tight 4 or 5% chop zone for basically the entire month since the 1st of December. And obviously, guys, with this lower price action, we expect volatility to start falling, which it has been, and most definitely we will see liquidations drop as volume in the market decreases. So a brief update on Bitcoin. Let's go ahead and take a look what's happening, and then we'll talk about the markets, DXY, stock market. We'll come back to Bitcoin after that. So what we're seeing over here is a bit of price action, which has more or less been consolidating in this tighter zone. We've had a few scam wicks towards the downside, okay? Another one over here, quickly eaten up. But most importantly, we're more or less hanging around this major support zone, which you can see over here. This major support zone being the zone between 16,750 and 16,800, just underneath the POC level, which you can see by this red line over here, indicated by the VRPV, represented by the price range of 16,818. Now, for the new viewers to the channel who don't know what this is, the POC, or point of control, indicates the exact horizontal price over the range. The range is what we see on the screen over here, the chart price action that we see on the screen here, which represents the most trades over that period. Okay, so the POC represents the price action where we had the most volume and most trades in comparison to everything else on the chart. As you would know already, by definition of support and resistances, generally when we do have a lot more trades and a lot more volume, we generally create areas of support or resistance, okay? Because historical orders represent where potential future orders can be placed, and those areas with higher volume generally are harder to push through or generally harder to push below if it is support. So in this case, we are sitting just underneath it, so it is acting as a resistance. Along with that, we have a diagonal downward sloping resistance over here, which is still very much valid. We temporarily broke out of it, and by temporarily I mean we exploded out of it, to be realistic, and we exploded all the way up to this $18,000 range where we got rejected quite heavily from that June to November low period. Okay, so we're trying to apply some context at the start before we get into the analysis later. So we got heavily rejected from level, causing a support resistance flip on the macro, sending us back into a downtrend, breaking down from the upper trending support line, which we developed over about a 2-week period. Since then, we have developed a downtrend. That downtrending support or resistance line is represented by this line here. This line is our downtrend. So this is the current downtrend we are in. So this is in fact the line we are looking at now to determine which way we are going to be heading. If we are able to break upwards from this downtrend, we will see a continuation in price. If we do not break upwards and we see a breakdown from here and continuation down, we'll see a drop in price. So we'll come back to this in just a moment and talk about the levels, the zones, the technicals, and bring up some data to suggest what we think is going to occur. But before we get into that, let's go ahead and talk about the rest of the market. So the DXY has seen a little bit of chop. It's been all over the place, really. We've seen ups, downs, sideways. It's been all over the place. But what the chart does tell us, we go to zoom out to a larger time frame. It tells us we are seeing a steadily decreasing in strength downtrend. So as we can see, we had an aggressive drop and we've been slowly decreasing in strength, causing some degree of consolidation as we push downwards. We have actually created our first higher low just over here, but we did get rejected again on a smaller time frame on this horizontal support range, resistance range now, which is that gray box, as you can see, just within the last 24 hours. So for us to see any sort of continuation to the upside, this local high, again, this support zone needs to be reclaimed. For us to see any sort of larger time frame continuation to the upside, we are going to need to break through its upper resistance level and push into these green zones. If we push into these green levels here, we're going to see the DXY potentially rally all the way back up to 109, okay? Until then, if we do continue in this downtrend, it does have a potential to extend all the way down to 101.3, where sits our next major low on this chart. Okay? So keep an eye on that, as the DXY determines a lot to do with where the stock market and Bitcoin does go. On the short term, obviously we have got rejected. We do expect this now to be acting as resistance, and therefore we expect a potential direction towards a downside as our premise for today until this level can be proven to be broken above. So as we do have a rejection here, and as resistance is resistance until it is proven not, the bias is toward the downside. Now, if the bias is toward the downside for the DXY, we do have to look at the markets, including Bitcoin and stocks, for a little bit more optimism today, looking at resistances and looking for potential indications that these resistances can break and we can see little moves towards the upside. Moving on to the Dow Jones, we are seeing more chaos on the Dow Jones, and we were going to do a video yesterday. I got halfway through it, but I got piled with some stuff I need to go sort out, some family stuff, get some presents for the niece, so I had to give up yesterday's video, but we're back here today. We were going to talk about this, so we'll talk about it now. We saw the DXY briefly break over this resistance, and we said in yesterday's video, which we never ever posted, that this area was going to be a massive area of confluence. It's going to be an area where we either hold above and push towards upside, or again get heavily rejected from. As you can see, we have heavily rejected and we're still within this horizontal range. Now, I like to call this the neutral range. This is a support resistance zone. When we are within it, we are neutral. We are in a downtrend, so we have a downtrending bias. We have to understand we are in a downtrend, so the likelihood that we continue down is greater, but it is still in a neutral zone, meaning this is an area of which, if this downtrend was going to reverse, it would occur within this range. Hope that makes sense. So if this downtrend that we are very much in was going to reverse and create a new uptrend, it will occur from an extension of this current support range we are in. The options are, we lose this low again, we make that next leg to a downside at 32,000. Option 2, we start breaking through these resistances we need to clear over these upper levels quite some time away, 35,000, to see a move towards this all-time high again. For the bullish case scenario, we have quite a bit of progress to make before we have that validation. For bearish scenario, where we are in a downtrend now, we can expect that to continue. For the downside, with the DXY looking to move down, we do have to be more optimistic for the short term for this price action. We're talking a larger time frame. I wouldn't expect anything good for the rest of this year, particularly until we break over this level. S&P 500. Same thing, guys. Looking at the chart over here, we're in this horizontal range. We got rejected from the range, we're pushing under. We are very much in this downtrend now. We are still looking towards that downside, that lower target of 37,000 or 3,700, excuse me, to 3,600, unless we can clear this 4,100 level, which will take us back up to retest a very major resistance level, which could potentially result in a macro reversal at 4,300. Looking at the 10-year government bonds, they're looking bullish. We're broken out of that falling expanding wedge, breaking through a 50 EMA, pushing upwards. A key rejection point is going to be 3.8%. Looking at that level there for potential rejection or continuation. Continuation equals dollar rises in value equals bearish for the markets, okay? And then obviously this is the opposite. So the dollar, if the bond yields start dropping, the dollar should decrease in value, but DXY should fall and the market should rally, okay? Same goes to the 2-year government bonds. We can see a bounce from that falling wedge. Similar thing, but the key level on here is that 4.4 to 4.35 level. I hope that summarizes the market for you leading into the Christmas break. Let's go ahead and dive a little bit more into Bitcoin. So, we gave you a little summary at the start of the video of what exactly is going on. Let's talk about our levels, let's talk about our zones, let's talk about where the price can go and what the price action can do. Then we'll go ahead and do our technical analysis, and then we'll go ahead and talk about our macro chart, particularly the 4-year cycle, particularly where the price is on the macro, potentials for crashes, and our macro reversal points. So the key things you guys are going to be paying attention to now is Bitcoin has dropped a hell of a lot. What point indicates the macro reversal? At what point will I have more confidence to purchase? At what point is that exactly? We'll tell you all about that today. So as we are speaking, we can see Bitcoin is breaking through its downward sloping resistance. Really nice to see. As you can tell on the chart, the 4-hour chart, we have not closed a 4-hour candle above this level that has not resulted in a rally. So straight away, you should be looking for a 4-hour close above that resistance to confirm the breakout. That is one point of validation we're looking for on this trend line. In my eyes, that would be adequate, as we would now have decent support below us, a POC, we would have the trend line below us, and we'll have this horizontal support range below us. A 4-hour close below this trend line would tell me that a breakout of this downward sloping resistance here has been validated and we're pushing toward the upside. That is in 58 minutes. By the time you're watching this video, it's probably already happened, okay? Or maybe it is just about to happen. Pushing towards the upside, we're looking for targets of these levels. Very, very obvious points over here, looking for these upper targets. Every single one of these gray boxes is a major potential rejection point. As you can see in the VRPV, every single one of these indicates a point of which we've had increased volume in comparison to the areas between these levels. What does that tell us? Well, it tells us these particular price ranges are more difficult to push through. There's more volume is required, therefore it is resistance, okay? Looking for a move towards the upside from there. The next major one is that June to November resistance. And I want to come back and talk about that one in a moment when we talk about the macro chart. But that really is the big resistance on this chart. That really is probably one of the largest macro resistances we have ever seen on Bitcoin's chart. I think probably since 2019, if I'm not mistaken. We'll have a look in a sec. But that is that key resistance that we need to break over for us to basically flip this entire level down below here. If we are able to push through here and find this area of support again, that will confirm this entire deviation is done, this low has been taken out, and we're creating a macro uptrend. We'll get back into that in a second. But until that happens, guys, we are underneath a major resistance. And while we are underneath a resistance, just as we can be under resistance on a short term, a resistance is a resistance until it is proven not to be a resistance, and therefore the downtrend still remains. Whether it be a short-term downtrend we're looking at here, whether it be a larger term downtrend we're looking at here, or whether it be a medium-term downtrend, the downtrend still remains. Okay, so let's talk about the downtrend. The next key level we need to wipe out realistically for Bitcoin is going to be this low over here, 16,200 level. If we wipe out the 16,200 level, as you can see, we've found support here a few times. Every single time we've retested this level, we crash back into this lower range. This lower range being 15,800 to 15,600. I believe, and what the data suggests in terms of our volume, if we do retest 15,800 to 15,600, we will not be holding that level again. Meaning, the next time we retest it, we are going to go through it. Where are we going to end up? There's two answers, because there's two places. Firstly, target number one would be this downward trending slope of the potential falling wedge pattern we have developed on the macro chart extending back to June, a very large falling wedge. This is an extension of the macro downtrend, the bear market downtrend, okay? Now, since this is very interesting, since this falling wedge pattern, this is where a lot of people get stuck on from structural analysis, quite complicated. Hang with me for a second. Since this falling wedge pattern has developed within a bearish structure, which is a macro descending channel, which is our bear market, since that pattern has developed within that structure and is pushed out of that structure, technically it is a bearish extension of this structure, meaning just because we have broken this downward trend line, we are still within this structure and therefore the downtrend is still active, okay? For us to confirm the breakout over here, we need to break out of the extensionary pattern, which is this falling wedge, which has been developed within and throughout this bear market, okay? So the confirmation of a macro reversal will occur not only when we're above this trend line, which we are, not only when we're above the June to November low, which we will be soon, hopefully, which is this red level over here, not only when we're above the 50 EMA on the 2-day chart, which is the red line, not only when the RSI breaks on the weekly chart, but we do need to break through this downward trending black resistance to confirm the macro bear market is over and the reversal is in. Keep it obvious, guys. The chart tells you exactly what you want to hear. Do not look at it from a biased standpoint. Look at it for what it is. The chart is exactly telling you what to wait for. This is the point you're waiting for a macro reversal. Flip the chart if you may. When would you buy? A rising falling wedge. You buy the rising falling wedge when it breaks to this downside and potentially retests. That is what we're saying. But wait for a breakout of the June to November low. Wait for it to retest the support, because by the time it retests the support, it will retest this downward trending resistance. The 50 EMA will break and the weekly RSI break. The price is much more likely to move to the upside. Now, like I said, until that happens, we are in a downtrend still. Very, very obvious downtrend. Whether it be a bullish downtrend, a downward consolidation within a falling wedge pattern, this is still a downtrend, okay? It is only not a downtrend when it breaks out, or the macro downtrend being the bear market. So the price can definitely still come lower to this 14,000 range, potentially even dip into this 14,000 to 12,000 range. Looking at that next level on the VRPV, we can obviously see local highs, horizontal support range. We can see a nice jump in the VRPV after a period of almost no volume, and then we can see a huge wall of volume underneath. What does that tell you? It essentially tells you, okay, price is falling, it meets some degree of resistance, which is going to be that 14 to 12,000 range, okay? A little bit more degree of resistance, and then below that, we have a huge block of resistance. So the price is going to drop, it's going to bounce, and then either hit the rock and then push up, or it's going to find it very hard to crack through that rock. I hope that's a good analogy. I'll try my best. I'm probably pretty terrible, but I hope you understand what I'm trying to say. Think of it like a trampoline, right? If you got hundreds of layers of trampoline rubber over here, it's going to be very, very hard to go through it. It's much more likely to bounce as it comes up to the support range, and bounce a lot as it reaches this major area of support. But anyway, guys, I'm going to go ahead and jump into the larger time frame now. Hope that made sense. I also want to take a look at Ethereum, MATIC, and Solana today, as those were the altcoins that actually won the poll in the free channel. You can see we did a daily poll. We talked about what coins we want to see. It was MATIC, Ethereum, and Solana. The top three will quickly analyze in just a moment at the end of the video. So we'll get into a macro, then you can go ahead and watch those if you're interested. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC. 0% trading fees on spot, massively reduced trading fees on futures, is one of the lowest in the game, and most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link bonus discounts every other month. We do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So, Brave New Coin Liquid-X 4-year cycle altcoin index. Let's take a look. What is the 4-year cycle telling us? Well, the 4-year cycle is telling us, and remember guys, this is all on the assumption that the 4-year cycle will hold this year. And we'll talk about reasons why it won't, and we'll talk about reasons or what data we're seeing that is suggesting continuation to the downside in a second. But let's just assume the 4-year cycle is going to remain. Let's assume the 4-year cycle can never break. Let's just assume it's going to work this time. What will we see? Well, according to the date to range analysis, we'll be looking at the next bull market starting around 15 to 16 bars after the bottom is in. This is a monthly chart, so about 15 to 16 months after the bottom is in. According to prior bear markets, they generally last around 12 to 13 months from all-time highs. As you can see, if we take from the all-time high to now, it's been 13 months. So based on the 4-year cycle, we should bottom out within December, or we should have already bottomed in November. That is what we're looking at. So assuming that that is the case, it's a big assumption, but assuming that is the case, 16 bars from here takes us anywhere between March to May 2024. So the next bull run should start from March to May 2024. We can go one step further. What is the average length of a bull run? We're looking at 19 bars. We take that from the point at which the bull run begins to the point of which the bull run ends. That is about 19 bars. That will take us anywhere between the October 2025 to December 2025 will be the end of the next bull run. Now, between the periods of the absolute bottom and the next bull run, we're looking at around a combined amount of time of 36 months. Within that 36-month period, we generally see uptrend, with that last 19 bar period being a more aggressive uptrend. As you can see, from these absolute bottoms to point at which the bull market starts, we generally see quite a decent rally in the price. We're looking at around 100-200%. So from the bottom to the point at which the next bull run starts, we see that initial growth. Now, the people who get into the market at this time not only experience a growth before the bull market, when the bull market comes, it compounds the returns on that growth and they experience that life-changing wealth. Very important you understand that. The time to get in and secure and build positions is when the bottom has reversed, okay? When the bottom has reversed, not when the next bull run starts. When the next bull run starts, you are too late. Not everyone, but the majority are usually too late to create life-changing wealth, unless you're a very good trader, unless you get lucky, unless you jump onto new projects and hypes early. It is very unlikely, however, okay? So, how do I know the next bull run will start that period? Well, based on the data, based on something called the baseline from the Ichimoku cloud, we can see that every single time the price drops below and crosses back above the baseline, we enter an uptrend. Okay, we can see the price drops below the baseline, bear market, bear market, bear market. Okay, the price jumps back above the baseline here, uptrend, uptrend. So we can see already our cycles represented by the baseline. Okay, I use the baseline a lot in my analysis, and it's a great way to determine that. Let's take a look at something, however, because there is some data to suggest that the 4-year cycle will not be holding. And this, of course, is the Gaussian channel. And the Gaussian channel, again, is something I've analyzed a lot lately, but I do want to point out that we have seen the first red candle on the Gaussian channel in the history of Bitcoin print this month. We've got 8 days left to make sure this candle closes green. We do need to push back above 17,300 to close this candle green. I'll be keeping my eye on this one because closing this candle red is going to be very, very bearish and potentially catastrophic for Bitcoin, as discussed in one of our prior videos. So guys, let's go ahead and take a look at altcoins really quickly in comparison to Bitcoin. I got a lot of questions saying, which should I buy? Should I focus on altcoins? Should I focus on Bitcoin? Let's answer this really, really quickly for you all. What are the difference between performance in altcoins and Bitcoin? Well, let's take a look at last cycle. the average return on Bitcoin from, let's go to the 3-day chart to make this one a little bit easier, from the point of which we entered the bull market to the first leg upwards, okay, we had a very significant return on altcoins as we did in comparison to, you know, basically every other coin in the market. I hope this one's off log. Let's go ahead and change this one off log. There we go. Let's go ahead and change this one off log. There we go. Okay, so we're taking a look from here, and this is kind of when that bull market initiated, when we kind of took out this high point over here. That's where we really entered that bull market phase. We'll go ahead and indicate that same point of time for altcoins, which was around this point of time over here. Okay, November 20. So from that first leg up on Bitcoin, from the November 20 to that January 4th level, we had a 205% rally. So from that point over here, this November 20 point, which is over here, to January 4th, we had January 4th of January, sorry, which is over here. We only saw a 89% rally. Altcoins really only start to kick off after Bitcoin has had that first leg up and first rejection, and after that point, altcoins really start to rally. If you can go ahead and look at the 22nd of January 2021 to the high, Bitcoin saw 128% growth. From the 21st of January, okay, to the high, altcoins saw over 450%. So generally when it comes to altcoins, and again, there are thousands of altcoins, so you're always going to have a few outliers that overperform and a few outliers that massively underperform, which actually constitute these numbers being what they are. Generally, Bitcoin performs much better from the bottom to the first leg in the bull market than altcoins. So reflecting that back to the 4-year cycle, your primary objective should be looking at buying Bitcoin from the bottom until April, May, area 2024, and then a few months after. So April, May 2024, and then maybe 2 or 3 months after a bull run starts, you can start to look at acquiring altcoins. That will give you the best returns. Let's quickly look at MATIC. MATIC network on a larger time frame. Just going to do a structural analysis, has broken down from its uptrend. We are very much in a downtrend, looking for two things: a rejection, again, the support resistance flip over here, and a continuation downwards, or reclamation of this level. Very, very similar stuff happening over here. We do have this downtrending resistance over here. For us to see any sort of continuation back towards the upside, we are going to need to break back above this downtrending resistance, confirming the fact this was an overextension, and then allowing us to retest this level. For us to see any sort of bullish continuation to upside, we need to reclaim the yearly low level at 103. This is that level over here, 103, reclaim that towards upside. For the downside, guys, we have a lot of downward resistance below us, including these yearly low levels over here, as well as these yearly lows over here. Okay, yearly lows down to 62, and of course lows which we did print way back in June. If we are unable to break through these levels, we are most likely heading down towards these next targets. Ethereum, more or less the same. The level which we do need to break out of is of course this downward sloping resistance. We had a rising wedge structure over here which we failed to hold. We broke towards the downside, found support under the resistances, and are breaking up. The next retest or rejection point for Ethereum will be 13,000. That is a very key level for Ethereum to break over. If Ethereum can break over that level, we can expect a rally back toward the upside. On the much larger time frame, Ethereum is looking very similar to Bitcoin. It has this bearish structure which it temporarily has, of course, broken out of, but it still sits within the current structure or current formation it has developed as an extension of that bearish pattern. So again, unless it can start clearing some of these highs, unless Bitcoin can start clearing that June to November bottom, I don't see these coins causing any sort of macro reversal yet. We're very much dependent on what Bitcoin is doing. Solana is basically not looking very good, guys. It has dropped quite a fair bit all the way back down to March areas of 2021. We do have the potential to find support here, but again, looking at the VRPV, it tells us a lot. The VRPV really does tell us a lot in cases like this. Let's go ahead and see what it says, because I haven't actually looked at it. Let's go ahead and input a higher road size, get a little bit more specific data over here. We can see that we do have temporary support underneath this current level, which we are holding. If we fail to hold that level, the next area of support is all the way back down at around this $4 level. A very possible drop for Solana to come if the markets do head back towards the downside, particularly if Bitcoin makes that move towards that $12,000 to $10,000 range. I'm gonna leave the video there, guys. Longer video today. I hope you enjoyed it. If you have any questions, leave them down below, and I'll catch you guys for our last video, which is tomorrow before Christmas. And I'll take a day off on Christmas from the family. Hope everyone has a great Christmas. Be back on the 26th. All right, guys, see you tomorrow.